Welcome to the discussion of Excel International's Level 2019 Jan Accounting paper. This paper has been tough on average, with questions on financial statements of partnerships, incomplete records, correction of errors, non-profit making organizations, costing and ratio analysis. The grade boundaries of the exam session have been comparatively lower, indicating an average low performance of the students. So, now let's see how much we can score off this paper. Section A of the paper includes 2 compulsory 55-mark questions. Of them, question 1 is on the topic of partnerships. In attempting this question, first either underline or sketch down the key points of the question. To do this, read through the question completely once. Key points to be gathered when you read through this question include: there are 2 partners, Rich and Sada, who have an accounting firm. This means the business is a partnership in the service sector. A new partner, Gailnia, joins the business on the 1st of January 2018. The ledger balances after trading 1 year with this new partner is given. However, they don't include the capital and current account balances. Additional information apart from the ledger balances are also provided. As we have gathered the key points, now we got to start answering the question. So, read through the question carefully. Part 1 of Part asks us to prepare capital accounts of the partners. So, first draw the format. It is just a ledger account with the 3 partners' names. Always, when you have to fill in a ledger account, you should first obtain the opening balances. So, go through the question from the beginning and extract the opening capital balances. In this case, we have opening balances only for Rich and Sada, because Gailnia entered the business newly at the beginning of the year. Thereby, the opening balances should be entered on the credit side with the year beginning date. Next, identify what other information we enter in the capital accounts. Always in a partnership, if they maintain both capital and current accounts, that means they have a fixed capital system, where they only record long-term capital transactions, like additional capital and goodwill changes in the capital accounts. So, now take the capital investment of Gailnia onto the credit side with the year beginning date. Next comes the goodwill entries. In this case, we need to recap the double entries. So, in this case, we have to follow both step 1 and step 2. Finally, after entering all of these long-term capital transactions, we should balance off the capital ACS. That is the end of 1 of Part A. The Part 2 asks us to prepare the SOCI, along with the appropriation section. So, first we should start with the format, then, recap what we enter in SOCI. All income and expenses relevant for the financial period will be recorded in the SOCI. The appropriation account will comprise of all what we give and take from the partners in the short run. Anything given to them will be subtracted, anything taken from them will be added. After drawing the format, just like in every SOCI question, start entering information from the additional information first. Second, prepaid marketing expenses should be subtracted from the total marketing expenses we have paid, which is the trial balance figure. This should be done since it is an extra payment, which is not relevant for the year. Next, accrued expenses of telephone and broadband, and wages and salaries should be added to the amounts paid, since the accrued figures are relevant for the year, but not yet paid. These totals should be entered under expenses in the SOCI. Fourth, additional information talks about a bank loan obtained by the business during the year, for which interest has not been paid yet. This means, loan interest is fully accrued, and there will be no figure available in the trial balance. So, we should calculate the loan interest relevant for the financial period. Since they took the loan on the 1st of April, the interest should be calculated only for 9 months. So, it will be 6% of the bank loan of 40,000 multiplied by 9/12. The fifth additional information is about disposed computer. In this case, only the profit or loss on disposal matters for the SOCI. Thereby, the carrying value of 1,400 minus the disposal price of 250 gives us the disposal loss of 1,150. This should be recorded under expenses, considering the sixth additional information. The annual depreciation of the non-current assets should be calculated and entered under expenses. First, leasehold premises will be just the cost divided by 20. Second, motor vehicles will be 20% of cost minus provision for depreciation, since it is depreciated using reducing balance method. Third, fixtures and computers will be 25% of the cost, since it is straight line method. In this case, we should subtract the cost of a disposed computer, because we have to only depreciate the assets available at the end of the year. Moving on to the seventh additional information, irrecoverable debts of 3,000 should be recorded as expenses in the SOCI. Next, the allowance for doubtful debts created indicates an expense, since we create the provision account by writing it off against our income. Since it is a creation, we do not have any opening balance of doubtful debts. So the answer will be just 5% of trade receivables after irrecoverable debts are subtracted. In this case, irrecoverable debts should be subtracted from trade receivables because they have not recorded it in the trial balance. In other words, the transaction is an additional information. After entering all additional information relevant, we should go back to the beginning of the question and see if there are any other information that we have not entered in the SOCI. This includes all income and expenses not entered in the SOCI through additional information, starting with motor vehicle running expenses, computer maintenance. Next, insurance. Finally, electricity and water, entering all the balances relevant to SOCI. Now it is just a matter of obtaining the totals for the cost of sales, gross profit, expenses and net profit. Next, we should fill in the appropriation account. All information related to this can be found in the top part of the question. Accordingly, first, goodwill is not recorded in appropriation account since it is a long-term transaction that goes to capital accounts. Second, interest on capital should be calculated at 10% on the closing balance of the capital accounts in Part 1. Third, interest on drawings should be taken at 4% of the drawings balances given in the first page of the question. Fourth, information says that there are no salaries for partners. Fifth, information indicates the profits or losses shared. So, now it is just a matter of totaling up the appropriation account and calculating the profit or losses to be shared. Then, they should be apportioned based on the profit or loss sharing ratio. Bringing the Part 1 into an end in that manner, Part 2 asks to prepare the current accounts. In this case, we should note that the current accounts record only transactions that change the partner's capital in the short run. Anything paid to the partners is credited in the current account and received from them or for which they are liable is debited. Now, let us start with the format. When entering information in the current account, follow 3 steps. Step 1. Enter opening balances found at the beginning of the question. Step 2. Enter the information available in the appropriation account. Everything added in it should be debited in the current account and everything subtracted in it should be credited. Now record any available drawings on the debit side of the current account. Finally, balance it off. Part B asks us to prepare the SOFP. In this case, once again, start with the format of the SOFP. Next, just like in every SOFP question, start entering the information from additional information. First, accountancy fee income which is not invoiced should be added as trade receivables, since they have omitted in the books. Therefore, 7,000 should be added to the trial balance figure and then recorded in SOFP as trade receivables. In the case of the second additional information, prepaid marketing is an asset and should be recorded as other receivables in current assets, since that extra money paid for marketing really belongs to us. Next, accrued expenses are amounts relevant for the year, not yet paid. Therefore, we owe these amounts. Hence, both 300 and 4,600 are other payables and should be recorded under current liabilities. Next, the 6% bank loan becomes a non-current liability, since it should be repaid by taking more than a year's time usually. Further, the unpaid loan interest becomes a current liability as other payable, since we have to pay it within a year's time. The next transaction is a disposal. In this case, we should remove all entries related to the disposed non-current asset. This includes its cost and total depreciation. Next, the disposed computer should be removed from the non-current assets. In this case, the cost of $4,000 of the disposed computer should be removed from the computer's cost in the trial balance and entered in the non-current assets first. Next, the total depreciation of this computer should be removed from the provision for depreciation and recorded under accumulated depreciation. In this case, the total depreciation will be the difference between the cost and the carrying value. Next, the depreciation figures should be considered under accumulated depreciation in the SOFP non-current assets section. Accordingly, the annual depreciation figure in the SOCI should be added to the provision for depreciation figure in the balances and recorded as accumulated depreciation. The seventh additional information is about irrecoverable debts. In this case, the irrecoverable debts haven't been written off before, therefore, we should subtract it from the trade receivables figure. Finally, allowance for doubtful debts of 5% should be subtracted from the trade receivables under current assets too. After recording all the additional information, next go through the balances given in the question and enter the missing entries in the SOFP. So, we start with the non-current assets at cost. Next, trade payables should be recorded in the current liabilities section. Finally, cash and bank should be recorded under current assets. Now, it is a matter of filling in the financed by section. In this case, we should record the current account and capital account closing balances. Now, we should calculate the totals of the SOFP. Completing Part B. Now let us move on to Part C. Whenever you get a theory question like this, understand each of the words of the question carefully. The question asks us to evaluate, which means talk about the good and bad of something. Now, what is that something? It is the use of accounting concepts and conventions in the preparation of financial statements. So, basically, what the question asks us is whether the use of accounting concepts and conventions are good to use when preparing financial statements or not. Since the question is for 12 marks, you should identify at least 3 separate points for and against both, where an interlink is built for each of them. Also, within them there should be both financial and non-financial points in order to reach the maximum marking level as per Excel marking criteria. Along with this, a good conclusion is required. Here's a sample answer for this, that can give you 12 marks with minimum time usage. Accounting concepts and conventions provide guidelines and set standards for the preparation of financial statements. Thereby, all businesses will have their financial statements prepared according to these common guidelines and standards. This is good for the stakeholders as well as the business because stakeholders can read and understand the information easily with less confusions. Further, there will be a higher level of trust on the reliability of the information in these financial statements. Thereby, obtaining additional investments, loans, etc. will be less difficult. Also, following these concepts and conventions in preparing financial statements enables comparison of financial statements among different departments of the business, different businesses in the industry and over time. Thereby, the business can benchmark themselves with a market leader or rival and improve the performance and position. Similarly, comparison over time would help in making strategic decisions and understanding any backward movements in performance. However, using these concepts and conventions in financial statements requires professional skills which can be costly. Sometimes, this can be individually unbearable for a small firm, so they might outsource the service instead of recruiting a permanent employee for this purpose. Next, there are clashes between accounting concepts. For example, when we follow the prudence concept and create provision accounts, we are violating the realization concept by recording entries before a transaction is complete. In conclusion, following accounting concepts and conventions to prepare financial statements is beneficial. In this answer, the yellow highlights are the fresh points, green ones are the interlinks, blue ones are the examples, making you ready to get 55 marks totally from the question 1 of the paper that we discussed now. Lined up next is the discussion of question 2 of the same paper. So, stay tuned with us. Don't forget to subscribe to my channel and get notifications of the upcoming videos. If any video explanations for any examination questions are required, do not hesitate to make a request in the comments below. So, make use of these free resources and do well at your examinations. Do take a break for a while now and refresh yourself. Have a wonderful time.